This is Danny Gould with the Gould team, selling Silicon Valley. Welcome everyone to another Silicon Valley market snapshot for the final week here in July of 2019. Wow, it's already the end of month 7. We're transitioning into month 8, everyone. And if you've been watching these videos for any period of time, you're probably wondering what's going on with the different camera angle. The audio might be a little fuzzy. And what I've decided to do, because I've gotten a lot of feedback from many of you, is that it's hard to actually see the screen. Or it's hard to see all the data. And instead of seeing my face, I mean, you guys don't need to see my face. Let's show you guys what you really want, which are the numbers. And so what I've decided to do is shoot this on my computer. Let's see how this goes. I really would love your feedback and would love to know what you guys think of this new setup. And without further ado, let's delve into the numbers and let's hope that I don't mess up my, my technology here. And we're going to share. Boom. Okay, perfect. So what we see here, everyone, are the Santa Clara County stats. These are the single family numbers, the condo townhome numbers. If you've been watching these videos, you've seen this chart many times. And here is some very fascinating data for all of you to take a look at. For the first time this year, pendings in both the single family sector and the condo and townhome sector are outpacing where we were at this time last year, or are outproducing, which means that there are more pending listings right now than at this time last year. This is for a number of reasons. This could be for a number of reasons. Number one, this year has been a lot steadier in terms of appetite, buyer appetite, that is. And last year, as you may recall, there was a significant drop-off heading into the summer months and into the fall months because of all the pent-up demand at the very beginning. There was so little inventory at the beginning of the year last year, and as we ramped up and we gained a lot more inventory, buyers backed off due to the the cooling environment of the market. And I think this year people have become accustomed to this new environment that we're in, and they're less afraid to make decisions right now, the buyers, that is. And definitely in the single family sector, we have more homes, but not significantly more. I mean, we're only looking at about 10 to 15% here. And this is just eyeballing it. We have more data. If we look back here, we notice that for sale, there is in the overall market. Now, what's the difference between this number right here and this number right here? These are homes in not only Santa Clara County, but all MLS listings regions, which includes most of San Mateo County, some parts of Alameda County as well. So there's more data, aggregated data here. This also measures condos and townhomes plus single families. And so for sale homes in all of the MLS listings regions, year over year and quarter over quarter from this quarter last year, we're both at 26.7%, which is actually very fascinating. When you look at it, you really start to think, well, this is very consistent data, right? So we can say that there's about 25% more inventory, 26% more inventory than there was this time last year. And that's been fairly consistent, not just month to month from July 2019 to July of 2018, but also quarter, April to June. We're talking June 2019. We're in July, but this data is for June. So very fascinating stuff here. Very interesting to note that the overall numbers are heavily influenced by the condo and townhome sector. And that's something that we've talked about if you've been watching these videos. That's something that we've talked about for a long period of time now, because, I mean, this right here, the 26.7%, we're not really seeing that, in the single family sector. We're seeing that mostly in the condo townhome sector, and that's driving up the average, right? So if we move forward here, we look at the velocity of the market, and this also plays into what we were talking about here with the pendings. But if you look at the velocity here from the beginning of the year to where we're at right now, we see that, in terms of active single family homes, there's about 124%, whereas last year there was 372%. That's like 3x the velocity last year versus this year. And that really plays into what I feel has contributed to this very normal, neutral, stable market. And the condo townhome sector, my gosh, look at this. I mean, this is incredible. 19, I feel like this is a typo right here, actually. But God, I assume that's a typo. Let's pretend like that doesn't exist, because I'm fairly confident that is that's a misprint there. There couldn't have been 19 townhomes. That's not true. But regardless, I mean, if you look at this condo and townhome sector, there's been a fairly steady increase in both the single family and the condo townhome sector, which should be good news. I mean, it seems like everything's progressing quite nicely, right? We have more homes on the market, but that was a given. We're well below where we would need to be in order for it to be considered a buyer's market. And we've gone over this many times in previous videos when looking at months of inventory. We're sitting at about 1.5 months to 2 months of active inventory in any given area. And we would need to be at 3 to 6 months of active inventory for it to be considered even a neutral market, and 6+ months of inventory for it to be considered a buyer's market. So again, in any given area, we are 3 to 4 times below the buyer market threshold per, statisticians. Now, obviously, it might feel that way, but again, when you compare these numbers to even say 2016, now, if you guys remember, 2016 was a great year for sellers in Santa Clara County. If you look at where we were this time last year, or this time versus 2016, we're basically at the same number of single-family homes. The only thing that's a little bit different is the condo and townhome sector. And that will continue to impact prices in the condo and townhome market for the foreseeable future. Until we get back to maybe the prices that we saw in 2016, 2017, will we really see like a stabilization? Because right now, if you have a condo and townhome in Santa Clara County, chances are you're on the market. Like, there's a lot of people that are selling right now for various reasons. And it's really hard to get into the nitty gritty and talk about the various reasons why people are selling. But if you look at the overall stats, it's very obvious that the condo and townhome market is not going to be slowing down anytime soon in terms of inventory. The good news, if you're an owner of a condo or townhome, is that the appetite is still there. It hasn't dropped. If you look at where we were last year versus where we are this year, the market's there. Now, if we look versus 2017 and 2016, we still have some catching up to do. So will that eventually play into, will we eventually see the 466, these numbers right here? Hard to say. It really is hard to say. But I will say this, that I do expect more single families to be consumed, or I will expect more single families to be absorbed before we see this number go up. Now, last couple things to go over here, the heat maps. And the heat maps here, it really, I want to look at the pendings before we look at the actives, because if you guys have been watching these videos for any period of time, you will know that I talk about this ebb and flow, right? Where we see certain areas in the black, and then the next month it almost transitions over, right? And then all the places that were in the black are in the red, and vice versa. And lo and behold, we're right where I expected us to be. In a lot of areas that were red, especially on the east side here, and parts of downtown towards in the center of San Jose, Cambrian, all these areas, they were in the red just a few weeks ago, and now they're in the black, and everything's transitioned over to being in the red here in these areas. Namely, the A areas. I would consider everything on this side to be considered an A area, with maybe the exception of Santa Clara. Although the tides are starting to turn there. If Santa Clara gets their school system in order, watch out, those houses are easily $2 million plus. But But really, you know, the reason that this is, and you'll know this if you've been watching these videos, is that there's a lot of people that shop in these areas first, and then when they get priced out or outcompeted, or they just feel like, you know, there's nothing there for them, they come over to these areas, and then this area tends to get oversaturated, and then buyers come back over here, and then they see opportunity here, then they come over here, and then they see the opportunity sway back here, and you know, so on and so forth. And that's been the case, everyone, for years. For years, if you go back and look at these pendings, year after year after year, this is the case. This has always been the case. And also with these active listings now, it's no surprise, you know, it's no surprise that a lot of these areas are in the black, given that we are over 25% year over year, or at 25% more inventory year over year. So there really is no surprises here. But what should be encouraging to many home sellers out there is that pendings are starting. We're in the black, and this map was completely red. This map was completely red at the beginning of the year. And now, as we're starting to progress into the latter parts of the year, I do expect to see more and more areas here in the black. And what that means for home buyers is that it's going to become increasingly competitive. And waiting 3 to 6 months for the market to go down is a bad strategy if you're a home buyer in today's market. Look at the data, look at the trends, and look at where everything is going, right? Everything was trending down, and now there's a rebound, right? And for the next 3 to 6 to 9 months, we're going to continue to see these areas rebound, and probably into the next spring quarter. I would not be surprised. I would not be surprised unless some sort of extraneous economic collapse occurs. I would not be surprised if next spring we see a very, very similar market to what we saw, not in 2017, but definitely in 2016. Not in 2018 or 17, but definitely what we saw in 2016, which is a very healthy, active spring market where homes appreciated 3 to 5% in a 3 to 5 month span. So, or in a 2 to 4 month span. So if these trends continue, if we continue to see more and more areas in the black year over year, we continue to see more and more activity on the buy side, right? I think we can all agree that for the time being, the inventory looks pretty stable, looks fairly stable. And I would expect to see somewhere between 20 to 30% growth, or 20, 30% more year over year in the inventory sector. But if some of that additional inventory starts to get absorbed, which it very well could, I definitely expect us to have a great 3 to 6 to 9 more months, which is really the first time I've said something like that in a while. But we're looking at these trends, and we're looking at it in real time. It's easy to overreact on any given week, right? The numbers could shift back next week. But if we continue to see these numbers for the next couple of weeks or the next couple of months heading into the fall months, I wholeheartedly expect next spring to be a good one if you're a home seller here in Santa Clara County. Folks, this is Danny Gould with the Gould team, selling Silicon Valley. Thank you so much for watching. Go ahead and leave your comments and questions down below. I'd love your feedback. Do you like this new style, or would you prefer the old style, selfie style kind of thing where I bring in the TV? That's the TV right there, by the way, guys. So I could do it there. I could do it here. I'm going to leave it to you guys to decide. Catch you guys in the next video.